Ladies and gentlemen, welcome. Sorry, we're having some technical difficulties. I was supposed to have a guest on the show. He actually was backstage, but we're trying to restart his computer to make sure that everything is going well and that his connection's good. That being said, while we're working out those kinks, okay, wait, I think he's here right now. Let me see. Can you hear me, Josh?
I can. Can you hear me?
Yes.
Great.
The camera seems a little laggy, but the audio is coming through perfectly, so it should be fine.
Well, I guess I'll just look weird.
Yeah.
Every now and then, seconds.
Yeah, no problems at all about that. Josh ended up putting out a tweet today, and after I had put out my video, I don't know if it was directly about me or about other people that were having some concerns about Robinhood's earnings, but I was a little bit
a little bit
on my report. Hey, Josh? Maybe the audio is a little bit messed up. Can you guys hear me fine? Is it just Josh or is it both of us?
Yeah, I think it's just me. It's coming in and out, and I honestly have no idea why, because my internet speed should be fine.
Okay.
Well,
can
you hear me okay still?
Yeah, I can.
Or are you losing that too? Okay.
I'm not 100% sure if there's a little bit of a delay.
Yeah, I lose you every now and then.
Yeah, you might even just be able to switch off video. I don't think it's doing us any favors.
I wonder if I turn off my camera if it's any better. Yeah, I think it's from my end. So this may be a no-go.
This is Josh's Twitter here, Invest With Me. And you can see that he is highlighting what his expectations for Q4 of 2024 will look like. Okay. And he has it coming in close to $1 billion, very similar to mine, 991 million in revenue. Where his OPEX, though, was very different, 451 million, leading to $500 million of operating income and 492 million of net income, which comes very much in line with what Wall Street is seeing. 53 cents. He's actually seeing 55 cents. I don't know if his connection is poor. If he can come back and the connection is good, we'll continue on. But yeah. So anyway, I ended up getting a couple of Wall Street analyst reports that I want to go through because I just put out a video today saying that these EPS targets are way off, and now I might actually be the wrong one. And I actually think that it could be in the 50 cents. And you know, this is what I think that I was missing. So the real thing that I was trying to do was using a margin to get to the EPS, where that was cheap, sloppy work. And what Joshua did was break down each operating expense, which we can't actually see. There's no way of knowing exactly what that'll be, but I'll tell you why. I'll show you guys why potentially he's right, and that the operating expenses are not going to climb while revenue is climbing, meaning that the margin for their growth will be much better than expected. Like all the top line dollars are going to flow right to the bottom line because operating expenses are not going to grow. Essentially, this is what might end up happening. So let's see here. Now, these are very close to the operating expenses that Josh sees. I actually see it coming up in 500, not 450. So a little bit more bearish, but still much more bearish than I was showing in my video earlier. And the reason is because the trading volume and the overall amount of equities. So we can zoom up here really quick. If you look at the options revenue and equities revenue, you see in places like this, Q1 of 2021, they saw $133 million of equities volume. So there was a ton of growth here in Q1 of 2021. Here, Josh is back. Let's see if things are better. Josh, can I hear you?
Yes, I can hear you fine.
Okay. You're still a little bit laggy, but as long as the audio is okay. Like I don't even need the video because the audio is, or the video is frozen.
Okay. Well, I might just be frozen then.
But you can hear me fine. Like, is there
Yeah, I
any
can hear you
delay?
fine right now, but I don't know how long it'll last, so we'll see. I'll give it one more chance.
I was just going through and showing off essentially where I'm seeing a ton of growth in certain areas. Like in Q2 of 2021, there was a massive spike in crypto. In Q1 of 2021, there was a massive spike in equities. But then whenever we look at the expenses, like brokerage and transaction doesn't really spike during these two times. Q1 and Q2 are relatively low. Okay. Technology and development is low during these times. Like all the expenses don't change too much other than marketing for these periods. And so what you're actually seeing is, you know, they have a lot of fixed expenses, but not a lot of variable expense change. And so this might actually be a period where there is a ton of actual revenue growth, but not as much on the operating expense side. Is that sort of what you're seeing, Josh?
Yeah, I think so. Because I know, at least by my calculations, a lot of their revenue growth is coming from crypto, where their margins are the highest and the lowest amount of impact would be for the cost of revenue or capex. Um, was looking back after you mentioned, that my number was low, and I think it is probably a little low, and my crypto number may be a little high too. But looking at I saw your breakdown of the net interest and what you think it's going to be for Q4. I had kept mine steady, actually. I think, a marriage of those two things where the net interest is a little higher. The crypto that I have, this 380 projection for the quarter, and millions for crypto trading. Um, I think that with maybe OpEx, someone had posted on my X about Hood actually does guide OpEx um,
Right.
expenses
Right.
for the year, and it looks like 520 is the high end, 420 is the low end. And they had said on the last earnings call that it looks like it'll be towards the high end. Now, what that means, I don't really know. Is 500 high end, or is it really all the way up at the high end? Because that
So
20
I
million
took
will have a
these.
pretty big impact.
I'll show you what I saw really quickly because I saw that post as well, and I think that highlights really well. So let's go to that really quickly. So what he's referring to is this part right here. This is from their Q3 2024. It's the only part of their financial outlook is they actually guide for their expense plan, and it says our outlook for GAAP total operating expenses is between 1.86 and 1.96 billion on a GAAP basis. So if I go back to my spreadsheet really quick, I added up the four quarters here. And I mean, we could just do this right here. And we get really close to their high end at 500 million. So
Right.
maybe this is like, I don't know, maybe marketing is 80 million or something. That's right at their high end right there.
And they've definitely increased marketing. I mean, you see their ads everywhere over the
Right.
last couple of months. Yeah.
And also the Doge giveaways, the gold plan. I think they put $1 million towards that. There were a couple of these initiatives throughout the quarter, along with matching people's dollars, that got a lot more customers through the door as well.
Right. Agreed.
But yeah,
So I think it's probably somewhere around 500. I mean, it's definitely on the higher end. I mean, they've already told us that. So you're looking at 513 is what you think it'll be?
well, I mean, it could be, yeah, somewhere between 500 and 513. I assume it's going to be somewhere there now after you had brought that up. Um, and then if we actually look at that, this actually brings us an operating income of about 488 million, and then a net income of about $480 million. That's incredible.
Yes.
That puts us right where Wall Street is expecting, essentially.
I think so.
53
I think
cents.
I think 53, 52. Yeah, right. 53, I think, is the non-diluted number.
Got you. But and then even So I was looking through one of Wall Street's reports. Did you see Morgan Stanley's report that came out on February 7th?
I did. Amit actually shared it with me.
Did you read what they had thought for assets under custody and everything? It seems so bearish. I don't know if you're still with us or not. If he's not, I'll go on without him. Let's assume. Oh, you
Yep.
here or no?
Yeah, I did see it, by the way. So Amit shared it with me, the Morgan Stanley report. They seem extremely bullish.
Well,
That's an
I mean, you say
understatement.
that. Look,
Yeah.
look at assets under custody. This is Q4. Look what they have. Assets under custody, end of period, 177 billion.
It's definitely higher than that.
Yeah, they showed in November it was 195. That makes up a big difference.
Somebody's
Net
not paying attention.
net funded accounts 24.5 or 24.5 million. That's really low. November they showed higher than that.
Yeah, and I doubt it went down. Not with the market going up.
Yeah, December was huge. I'm sure I highly anticipate that we get 25 million.
Yeah. Yeah, we should be over 200 at least.
Yeah, I completely agree. For assets under custody, over 200. So this is why I even think that their numbers would be low on potentially the interest revenue side or other revenue, anywhere where potentially we're not looking at the transaction-based revenue because we already know the volumes.
Right. And we can get a pretty good estimate of what those will be just based off of historical and then take rates for the different categories for the transaction-based revenues.
Yeah. So you had a post really recently where you thought crypto revenue could be like really spiking up.
Yes. So I've been keeping track of it, and I think I explained kind of how I was coming by the calculations. I mean, for Q4, we really already know because they gave us 29 days into December what their trading volumes had been, the notional volume for crypto.
27 days.
Okay, 27 days. So we were a few days short. You could do the average of what we had gotten up through 27 days, and if you extrapolate to the end of the month, I think you come out to like 31 billion, 32, somewhere in there. I used 30 on the low end for notional volume in December and just added that to the 35 in November and then the 5.6 from October. And then I applied. So I did what I show here is a take rate of 0.54. I think I kind of did a range. It's either going to be, I think it's somewhere between 0.5 and 0.54. I know you're a lot lower.
Yeah.
But a lot of the volume that occurred in the second half of the quarter when take rates were higher than in the first half of the quarter when take rates were lower. Because they really started to increase take rates in November when crypto started to spike. As I think I was seeing 0.5 in November when I was going to place trades. And that was for BTC and ETH.
Do you think that is like an accurate projection of the number? Is like, because I know that a lot of the ways that Robinhood will roll out their pricing is they will start with small cohorts, and so I always wonder if like your specific pricing is a good way to map it out across the entire board. That's why I was a little bit skeptical.
I mean, I have no way of knowing, right? I only have the numbers that I know that I'm seeing. I mean, what if mine's low? What if I'm on the low end of the cohort? Like you don't know, right?
Yeah.
So I mean, it's an estimate, right? It could be a lot lower. It could be higher. But I think the range though is somewhere between 350 and 380. If you go down to like 0.49, I think you can get 350-ish in crypto.
Right. 350 million in terms of transaction-based revenue.
Right.
Yeah. It's interesting. I'm definitely conservative in certain areas, or maybe just misunderstanding how certain the data is in certain areas. But I can't imagine with the speed in which they're increasing assets under custody, the pricing increases in crypto, that the 930 million or 950 million, wherever Q4 expectations are coming in from Wall Street, that is not going to get beat. Like
Right.
it's almost like a certainty to me that they come in higher than that.
I think
But
so. I mean, and I was estimating net interest way lower than you. I kept
just
it
because of rate
flat,
cuts,
right? Just to be conservative. So that was my conservative area that I
yeah,
kind of, stayed in. So I mean, you could bring my number down, you could bring net interest up a little bit, but you at the end of the day, you end up around the same number for revenue and you end up around the same number for net income, which is around just under 500 million for net income.
right,
480 to 500, somewhere in there.
yeah, yeah. So what else are you seeing from Robinhood in January that gets you excited for the next quarter?
So for January, I've already started looking at crypto and what the volumes are looking like there. And then referencing back to December and November, what we were seeing in those months, because we know the notional volumes. Well, we definitely know it for November. They already told us what it was, but we have a pretty good idea of what December was too. And if you adjust for the take rates going up a little bit in January, even though the volume is down, it's not down a lot. I'm still thinking it'll be somewhere between 20 and 25 billion in notional volumes. And I think the take rate being higher will offset some of the drop in the trading volumes. I'm getting it's not as high as December, November, but I'm getting around 130 million for the month in revenues for just crypto. So if you were
Wow.
to extrapolate that out for 3 months, right, you get up to almost 400, 300 to 400 million again in crypto revenues. So I don't think there will be a big drop off in Q1 from what we saw in Q4. And Q4 was a crazy quarter. Yeah, I think that could become the norm for Robinhood.
Now, do you think that there's even a potential more bullish case that the market share for Robinhood has increased between,
Right. Yeah.
Q3 to Q1?
I think you'd have to say it has. I mean, if you I think you were looking at the internet traffic the other day. I
Right.
think looking at stuff like that, looking at where they have been on the App Store, um, they're definitely a lot higher than they were 6 months ago. I think the adoption, you know, is a lot higher over the last couple of months than it had been previously. So I think the number of people trading on their platform as opposed to Coinbase or somewhere else will be there too. Um, so I think that'll be part of it. I mean, it's bullish. I think they're definitely taking market share, and they should be, right? They offer way lower entry into crypto as far as the take rate that they have versus their competitors.
Now, do you have opinions of that, or of what happens more longer term as potentially larger financial institutions start getting into crypto? Where do you think Robinhood settles on their pricing?
Well, I don't. Do they share what they give to institutions for trading on their platform like Coinbase does? I know Coinbase gives
Um,
a really low fee for institutions,
yeah, I don't
uh,
even think Bitstamp is a part of it. I don't even think they're doing that
right?
yet.
No,
But I mean, what I mean is, like, if larger institutions like the JP Morgan's, Bank of America start getting into the trading side of crypto, where do you think their pricing is going to be on a consumer level? I'm sure Robinhood is going to try to, like, I think Coinbase is going to continue to come down on their retail side.
right.
And there's so much margin expansion that, or take rate expansion, that Robinhood can have because they're pricing so much lower than their competitors. But where does this all settle out in? Where is this 2 years from now, 3 years from now? The
I think
average
they'll
take rate
reach.
on crypto.
I think they'll reach an equilibrium somewhere in the middle, unless a new player comes in that really throws a wrench into that. I think Coinbase will come down and Robinhood will come up and they'll meet somewhere in the middle. I don't know if
Like around
that's
1%
1%,
ish.
right? Yeah, probably 1% seems good. Unless you have somebody that does what Robinhood did for equities and comes in and starts doing zero commissions for crypto and just upsets the apple cart. That would be bad. That's their biggest area as far as transaction revenues are. But right now, I mean, we have no way to know if that'll occur. I would think though, 1% sounds good. If
Yeah.
yeah,
Yeah.
if nothing changes as far as the trading space.
If nothing changes in terms of the market share or the amount that they are trading per quarter, even that is a massive increase to their
Yeah,
top line.
it's nearly a double, right? I mean, you're talking about 40% from where they are now. And I think they keep bumping it up, you know, over time, slowly. It's like the frog in the pot that's boiling and it doesn't know it's boiling because the temperature is just changing a little bit over time. I feel like that's what's going to happen to traders. They're going to be like, I didn't even notice it went from 0.6 to 1%.
Yeah.
I don't, and
Yeah.
most people aren't going to care, right? I mean, unless you're trading an insane amount, I mean, you don't notice a 0.5% probably.
Well, I
I mean,
honestly think you're thinking
obviously,
of it the wrong way. I think the people who are coming from Coinbase are going to be really happy that their rate just went down.
right. But it's surprising that they haven't moved quicker, like that it's taken this long because this isn't new. Robinhood has always been cheaper, or at
Yeah.
least they have been for the last 2 years. So, like
Yeah.
anybody trading on Coinbase, unless they have some other reason, like to stay on that platform, it doesn't make sense. Like, why would you pay more money when you could just transfer your assets over and it's like, it's free money to trade on Robinhood.
I think it's like any financial institution. The switching costs are very long, or it's a
Yeah.
long time to change, or even education wise, they don't even know it's cheaper. So that's my opinion of why doesn't a lot of people that choose to use their large bank digitally only? There's a massive cohort of people that treat J.P. Morgan like it's a digital bank, and yet they accept all of the you know low APYs and slow performance in the app, and they don't actually get a sort of an upgraded thing. And I honestly think it's because they don't know that that's even possible.
Which is
And
crazy. You think that it would just be I mean, as transparent as stuff is now with the internet age, that people being unaware of that is kind of crazy to think about, but it's true. I mean, some people just don't know.
yeah, yeah. But hey, I talk with people all the time. I ask them opinions of the companies that I'm holding, and they don't even know what's uh, either
Yep.
what they are or what they do. Or some people look at Nvidia like it's still a like a gaming chip company. Like they're focused on the wrong segments, and they don't even know what's changed. If you're not focused into it, like a lot of the people in FinTwit are.
Right. I mean, it's like my dad asked me what I was investing in. And I was like, well, most of my money is in Robinhood right now. And he was like, what's that? I was like, how do you not know what that is? Like, do you live under a rock? I mean, their
Well,
ads are everywhere online, but I guess maybe he doesn't get fed that by the algorithm.
yeah, yeah, exactly. And I think as they get better, a large part of this is also just going to be changing the type of cohort. Like we saw that a ton with the retirement accounts opening up. Like this just changed the type of user that's on the platform. And I think that that's going to happen even more as they branch into crypto even further.
Agreed. And I think the financial services aspect of that will help a lot when they do start the wealth management through Trade PMR or whenever they start to roll out they've hinted at AI agents for management of wealth at really low costs. I think that'll bring in probably the younger audience for the cheaper options, but like their serious wealth management options that they're getting through their acquisition of Trade PMR will be a good draw for the older cohort that doesn't
Sure.
really exist, right? I think it's why they did it, or part of the reason why they made that acquisition.
Well, I think that's the same thing with Bitstamp, is that this is more of like uh, a large upgrade for the seriousness aspect of the crypto user, trying to bring in more of the products that, you know, a more avid trader of cryptocurrencies would want, which is more coins, staking options, access to, a good DeFi wallet that allows them to get onto those types of markets. Um, Robinhood's adding those, but it's slow right now.
Yeah, and I think some of that was regulation, right? They were slow at least in the US, just because of regulatory holdups and red tape. But that's behind them now. I expect it'll move along pretty quick this year.
Tell me, do you sort of foresee any event contract ads, or like, did you price that into your revenue? Do you think that that's going to be a big portion in 2025?
Probably not this year. I think it will be in 2 to 3 years. I did some estimates. I think it's on my Twitter for what it could look like once Robinhood matures in these new areas like the RIA space and event space. I mean, events I think could be a 9-figure, revenue stream for them. And they don't really have to take that much market share to get there because the total addressable market for sports betting is like hundreds of billions of dollars. So you're talking about taking like a 1% market share is $1 billion a year or $250 million a quarter, which right now would be the third largest revenue stream that they have, like if it existed right now.
Right.
And the same for the RIA space is like trillions of dollars in wealth management. So you take like 0.5% of the market share for that, and you're like, oh, look, there's another 9-figure revenue stream for Robinhood.
Is this what you have here as well?
Yeah, that's where I kind of talked about what it could do. Do I have the chart in that one?
No.
I just have what they would make if they were to take a certain percentage of the market. Yeah.
Yeah,
So
because
3
like
to 14 billion, yeah, for 1% of that space.
it's interesting, right? Because the way that they're going to win that is doing and now you put a conservative fee rate here, but
Yeah. I think they did give us a hint that it would be 0.25 or something like that percent, if I
yeah,
remember.
because it would need to be low to offer that type of Robinhood service, right? You'd have to expect they sort of
Right.
follow along on that path.
Yeah, it's very on brand for them, right?
Yeah.
'Cause they want to make it available for they want everyone to be able to choose that option if they want it, especially gold members. I'm sure gold members will get a good discount.
Now, did you hear about this platinum member product?
Yeah, I saw the job opening. Has there been more to it than that? I know they were offering a position for it at one point.
No, do you have any sort of ideas on this, or like do you think this is another um monthly service, or potentially just a type of team to service users that have a certain amount of assets under custody?
I think that would be the way to go. I mean, I'm not going to pretend to know, but if I had to guess, I think it would be asset based in their, how much they have on platform. I think maybe you get above a certain threshold, you can opt in to, a little higher level of service. It could be tied to the RIA space where like, hey, we got a high level client here. Maybe they get a certain style of management for their portfolio that's not available to somebody with 5K, which would kind of be off brand. But I mean, if they're still offering that service, maybe just not at the same level to everyone, I don't know that it would really hurt their, how people view them, the optics of Robinhood.
Yeah, yeah. Well, the only last question I have for you is, how are you pricing in international expansion? Do you look at this? Obviously, I think they said they wanted to get into Asia in 2025. Do you think that these will be big markets for them?
I don't, it depends, right? Where in Asia? I think regulation, was it Singapore is where they're trying
Yeah.
to get into the exchange, right? I mean, it'll definitely help, but maybe does Japan fall into that? Are they going to be able to trade? China, will they even let Robinhood exist in China or Russia?
Mm.
I don't know. You're right. So
Yeah,
Asia, I mean, most of that area is taken up by two countries that are probably not very friendly to the idea of U.S. brokerage being available.
yeah. If I were to take a bet, I'd probably say it's going to be things like, I mean, Japan might be one of them. Singapore, uh, you know, probably UAE as well. They'll get somewhere into there. I think it'll be a lot. They'll try to aim for more of the richer countries, and I don't know if they're worried about population, more assets per customer. Really, that's where I think they'll try to
Yeah,
focus.
yeah.
But
More
um,
affluent countries, I guess. If
yeah.
you look at Singapore and Japan, there's a lot of wealthy individuals in those nations.
hmm
Yeah.
So I think that could be interesting. But even then, I don't know about the success of these. Like I don't know how well the UK is doing. They haven't really shown off any statistics on that, really. Um, I know for me, if they were to come to Canada, I probably wouldn't even use them.
Yeah.
So it is interesting there.
Yeah, it's I'm curious how they determine which countries are worth trying to deploy into first.
Yeah,
I would
yeah,
assume they have some data to support, why they're not in Canada, but they are pushing for Asian expansion. UK just kind of makes sense because they're a very similar market, you know,
sure. And
wise to
seeing a lot
us.
of fintech growth.
Yeah.
Yeah,
And then the EU itself, like I don't know enough about Germany would probably be the next really big wealthy population in the EU that you'd want to target, but I don't know if their regulations are more stringent or not.
I have a feeling they're going to get into Mexico soon as well. They just hired on a board of directors member quite a while, or well, not quite a while ago, but a few months ago, that specializes in Latin American fintech. And I think that they'll try to push there. I don't know if they'll go directly to Brazil or Argentina, but I think Mexico has a high GDP per capita and very close operationally to America. I could see them getting there pretty quickly.
And outside of what is like Nubank is down there, right? Do they offer crypto and the
Yeah,
like on their
yeah,
platform? Okay, yeah,
really big into
that was
crypto. Really, like that's their fastest growing product right now is New Invest, and there is a lot of fintechs. Like if you look at Argentina, everyone wants to talk about Mercado Pago or a couple names, but I think the latest report is that there's something like 270 different fintechs that are growing year over year. So
it's a
it is like a big
saturated
goal.
space.
Yeah,
Might be
it's a
hard to
gold rush.
break in. Yeah.
But um, Josh, where can people find you?
Yeah, sure. You can find me on X at Oshawa Hill or just look for Invest with Meh. Might be easier to remember. I do have a Substack too. It's just meh meh meh. So if you get on there and search, it should pop up. I do a lot of long form stuff there, but then 99% of my content is on Twitter or X. Sorry, didn't mean to
Got you.
blaspheme. Yeah, but
Got
yeah,
you. I'm going to do a little Q&A with my audience and everything, but I'll let you go and then
sure.
we'll talk up soon.
Yeah, thanks, man. Appreciate it. Sorry for the technical difficulties. Everyone have a good evening. I'll talk to you later.
Bye, man. All right, ladies and gentlemen. That's a little extra clarity. I really appreciate Josh coming on because I was wrong. Like, I think EPS, it's so hard for me to see a company that, like, all the new dollars that are coming in just completely breaks trend, goes all to the bottom line. But he's right. They called this out. They expected a certain amount of OPEX. That's probably what they're going to end up, going after. It might even break the top line because if I think if a company sees so much growth that's potentially like right in front of them, well, capitalize on that. So I could see it being above their guidance on OPEX, but if you can bring in way above on top line growth, well, then it could still be worth it if you grow, uh, even a little bit faster than what you had expensed earlier. I'm from Singapore. Most Singaporeans I know use IBKR. Yeah, IBKR definitely has a good grip on international markets. That's for sure. They offer a very good product that is reasonably priced. That's one thing about Robinhood. Like it can be cheaper than a lot of the other solutions, but honestly, it's very localized and hard to build out for an international market. So they had built a product that just works very well here in Canada, the United States, Singapore, pretty much all over, right? So, but they have a head start. They created their business 30 years before Robinhood was even around. So there's a lot of technical solutions that they figured out, but It doesn't matter. Whenever you're buying a company, you're not betting on a company like you don't get rich by betting on the biggest company. You get rich on betting on a company that has the fastest rate of unexpected change. Okay, so put your money on companies that have that you have alpha on that the rest of the market cannot see. So, and I think Robinhood is very much in that vein. However, the market is starting to catch on that they can grow very quickly. That's for sure. Steve says sports betting is a big negative for me, particularly on the same app. Well, it's not that they're, I mean, you can call it sports betting, but a single contract for one game that's already over, I wouldn't constitute as them getting into sports betting. But who knows? Who knows? What's your thoughts on relatively low 2025 and 2026 analyst estimates? Is that a catalyst for the upside? I mean, that's a catalyst for every single stock. If you think that their estimates are low and they could potentially grow faster than that, the problem with Robinhood is they just completely do not have linear growth. They suffer from the same problem that Coinbase does. They're just a little bit more diversified, meaning that yes, they could be growing in market share, and that's very good. But a market that has a downturn is going to be a market that has a downturn even for Robinhood. Okay. Now, they've tried to highlight they can change their business style as markets change. So if rates climb due, to an inflation problem or something like this, then they can get more into net interest revenues. And then, vice versa, they can get into more transactional based revenues whenever the market is hot. So hopefully, analysts are wrong. They have a long-term projection of 20% growth rates year over year. So I can't imagine that they go down to the 11 or 12% that analysts are expecting. I think that's just crazy. But that's across the board. Like I find this the same thing with SoFi, Robinhood. I think it's one of the funniest things with all these companies is that expectations over the long term, like people just place their expectations further out just horribly wrong. Always very conservative. Yeah, a lot of cyclicality in Robinhood's business, exactly. Tanner, what happens if you change the take rate on crypto to 29 basis points and have a revenue of 510 million? What kind of revenue numbers do you get? Okay, so let's take a look here really quickly. I don't know what you mean by the 510, unless you mean the operating expenses. So if we take a look, what he said is that my net interest revenue is very high, and I could be wrong, right? All I'm taking is the assets under custody and lowering it. So let's even imagine that this is like down at 16, okay, somewhere around there. Even then, we're coming in very high on revenue, and then this is sort of what Josh did. He lowered this by quite a lot, but then on transaction-based revenue, he goes down to crypto notional volume. Instead of 44, he has somewhere closer to 50. But let's just follow this guy. Put 49 basis points, and then we'll scroll back up. It's color coded, so hopefully that's a little bit easier on the eyes to know where I am on my sheet here. But cryptocurrency goes up in value, and then we're back up to $1 billion. Okay. Now assume that this does stay flat. In terms of the take rate on assets under custody, we could be back to here, and then we're seeing an unbelievable quarter. But that's probably not going to be the case. OpEx of 510, yeah, that's where I am, yeah. So I was wrong. I can see how they get to 53 cents. It's because all the money that's flowing in is going to go down to the bottom line. So this really is going to be like 23% net income margin to 48%, 50%. Like it's going to be ballistic. And that's crazy to me. But think about the potential growth for Robinhood if they continue at this rate. Them pushing nearly every dollar aside from like they can keep their margin low and then put a ton towards future growth, do more M&A, do more, development in-house, add more to your head count. That's something that we don't talk about for, what do you call it? Robinhood very much. But if you look at headcount, back in Q1 of 2022, they had 3,900 people working for them. Then 34. Then they started having these massive layoffs on the trading side. It was it was my understanding that, okay, well, this was due to them. Like they had low volume, so they were like, okay, we don't need everyone here. But then as they would start to get more volume, they would have to hire like crazy. But we just haven't really seen that. We've had a very conservative, slow growth rate back up to where we see. So I could imagine a spike up in headcount this quarter, but like it's not going to be back up to 3,800 or something. This is going to be, maybe at most. I mean, I don't know. I don't want to say at most, but like 2,400 if they had a huge hiring spree to try to handle their crypto volumes or something like this. I mean, honestly, it's hard for me to project out on an individual basis each operating expense because I have no way of knowing. But if we just go back to whenever they were very busy, there really is not much change. Like, it's crazy. So I don't know. We'll probably see a large spike up in marketing. Yeah. I don't know. The earnings results are not tomorrow, but Wednesday after the day closes, after the market closes. So that's going to be a very interesting call. I think that they're going to add a lot of what they expect for their M&A for Bitstamp, for Trade PMR. It's going to be exciting. Drew, it can keep going higher, but it's not guaranteed either. Like Morgan Stanley, I was reading the report, and they think it's actually going to go down in Q1. I could probably suspect something along those lines as well, because crypto, like, honestly, it's becoming a crypto trading platform. If they don't have as much volume in Q1 than they do in Q4, well, then they will make less. But so this is where I think Robinhood's never going to quite get the premium that some companies could get, like a Palantir or something. I mean, not many companies ever in the world could get a premium like Palantir, but you know what I mean? Like a unicorn-esque business of just, the Shopifys of the world where they're just priced completely differently than everything around it. But with Robinhood, they are just so stuck to where the market is going to be, and it's out of their control. And they can diversify, but they can never get away from it. Well, they don't guide, right? So there's no tank on guidance because they won't give guidance. So, yeah. And that's all we're going to see. They do OpEx guides. Yeah, Drew, I think you're right. That's the very funny thing about crypto right now is like there's so many things in play right now that this could be a massive spike. It's just whether that's a 2025 initiative or 2026, because like I don't know. A lot of things that I'm going to be thinking about for Robinhood going forward, but I am excited. And they're doing great things. They keep trying new initiatives. They're just handling the growth so well. That's another aspect that I love about Robinhood. Just handling the growth. Stock-based compensation as a percentage of revenue could be lower. That's for dang sure. But even then, that's more potential growth. The earnings call is going to be a video call. So that'll be new. It's not going to be the first live earnings call. It's just video. I'm not trimming. And I'm not hedging. Not hedging or trimming. I think that this is right. And I think I'm being conservative in a lot of areas. I haven't added a little bump from, events contracts. That should be 5 million extra. I think credit cards will do better than people are expecting. I think margin is going to be way higher than people expect. So I'm just trying not to put any of that through. Yeah, my hoodie. That's funny. So this is what go back and watch a little bit. I believed that this morning I said, hey, I think I'm missing something because the numbers that I'm getting are showing a massive miss. But now, like we just had a Josh on the call. This is someone who made me realize that, like, no, we need to do it by like a sum of the parts of their OpEx. We can't just be taking a margin. Like a lot of companies, like I find with SoFi, you can almost take a margin of what they're making because as they add new revenue, those come with new expenses, right? But Robinhood might not be that way. They might have, very, very little variable expenses and everything else are fixed costs, meaning every quarter it's this much and they can put through this much volume or this much volume and they still have to pay this much. So if they put through this much volume, well, you got a negative. But if you put through this much, that's your margin on top. You know what I mean? So they have like 90% fixed costs. That means as they grow higher, only about 10% of that is going to affect the bottom line. These are things that I forgot, operating expenses, full year guidance. These are things that I just didn't assume whenever going into it. So this is why I put those videos out there, because it's not just me, like we're a community. This is what I'm thinking. Tell me what I did wrong. People put in the comments, hey, well, I think this is wrong. I go, you know what? You're right. And we'll learn from that. What are your thoughts on video calls versus audio? I don't care. No, there isn't a trend in past earnings. That's the thing. Robinhood doesn't create a trend. So, like, I'll show you. I'll show you what I mean. Actually, bear with me. I can show you a trend, but it's just going to take me a second to bring up a different spreadsheet. 1 second. Just got to go here. I'm changing over all my spreadsheets to these color-coded ones so then you guys can see them a little bit better. So with SoFi, you can find trends. Like they're very, very linear growth type companies. With Robinhood, where's the linear growth here? How do you use a trend whenever you have something breaking out like this? And now net interest revenue, don't even follow this. I didn't even add all the parts together. But this one, this is crazy. Show me where the trend is. So there is no, you can't go back and look at other numbers to even try to figure out what's going on. Yeah, Drew should be up here. Honestly, Drew's 100% correct whenever it comes to Robinhood here. You need to be following what the market is doing, what crypto volumes are doing, and that's going to get you where they could potentially be showing off. Now, like I said, I showed off Morgan Stanley's numbers here. This is from February 7th, and they have 177 billion. Robinhood has come out publicly and said, hey, we are actually seeing, 194 point something. Here, I have it here. Bear with me. This was from November, not even December. In December, grew the company even further. They said, we have funded accounts 24.8 million and 194.6 billion. Okay. Then if we go back to the Morgan Stanley report, bear with me. A lot of clicking. Sorry, this is Q1 of 2025. They don't even think that we're that high. Like Morgan Stanley doesn't even think that we're there at the end of Q1. Q4 is over here, 177. That doesn't make any sense. You're 4 billion off from where they were in November, and you're saying that's where they're going to be in March. I don't believe that. You know, that's the amazing thing with Robinhood. You transfer over your money to Robinhood in the brokerage side. Okay, you don't believe in the market, you want to take it off. Do you bring it back to your bank? No, you bring it over to a Robinhood cash account because you're getting 5%. Well, you're not getting 5% anymore, but you're getting a very high rate versus what you can get at other institutions. What if you have a face for for audio? I've got a face for audio. I didn't doesn't stop me. Um yeah, like it's actually clueless. Like it's that part is just like me. Like they just didn't even give it enough time to think about it. They were just right on the OPEX side and wrong about the November data. I was right about the November data and wrong about the operating expense side. So where's this going to be in, by December? Do you think it stays flat? It's such amazing growth on trading volume. I don't think it stayed flat. That probably continued to go up. If anything, it grew just because net market gains grew. People made more money, so there's more money on the platform. And then if there's more money on the platform, if people continue to like securities lending revenue goes up. If they bring it back to cash sweep goes up. If with assets under custody, net interest margin or net interest revenues climb. Margin interest increases because people have more ability to take more dollars from Robinhood. And then you also have market share gains. So not only are they growing, the customers that they have are growing, but then potentially they're getting more of the total pie in like taking away from the Coinbases and the Schwabs of the world because people like what Robinhood has to offer. So, yeah. I actually I was wrong on EPS. I think that this could climb drastically. Now, let's go back and highlight really quickly because I think that this could be an important factor as well. Morgan Stanley, rightfully so. Actually, let me just back this up a little bit. In Q1, you can see that their EPS targets are somewhere between 25 cents for Morgan Stanley, 30 cents is consensus. But yet, over on Morgan Stanley side for EPS, it's 44 cents for Q4. So there is probably or could potentially be a drawback in Q1. Now, the funny thing that I find with EPS, potential for brokerages is there could be so much explosive change in markets. There's a certain amount of expectation that you can sort of price into Google's growth rates, and there's trends that you can keep up with there, but you're not really going to see a 30% change quarter over quarter in Google search or YouTube ads or something like this. There could be changing in the markets. There could be an adpocalypse, but all those are relatively to the downside, like black swan events. But for Robinhood, there can be explosive markets. Something happens with the change of like DeepSeek. Okay, people start to sell. You think that's bad for Robinhood, but it's not. It's a lot of volume. People bought the dip. Like there's a ton of volume there. That's what they care about, So changes in market gains, but then a massive fluctuation in change of options contracts signed, equities that are traded. So there could be massive bumps in volumes depending on the amount of like crazy days that end up happening in the markets. But the same could be true, the other way around. Markets could get really stale. People could take their chips off the table. They could do long-term investing like me. Robinhood doesn't care about people like me. I don't do anything. I don't do enough, Couple of equity buys here and there. They don't care about me. They like the day traders. They like the, the options writers. They like people that like to have a little bit of fun. So yeah. Crypto volume was strong in January. It was good. It doesn't look as high as November or December, but yeah, it does look good. So Trump administration equals good for Hood? I mean, it does seem so. It does seem that way. A lot of change, which is exactly what we're seeing, is definitely good for markets. People love to speculate. And then we also have to price in new products, right? They have futures rolling out now. index options rolling out. They have all these products that just simply didn't exist previously. So SoFi is looking less attractive short term. On reason, potentially, is it could use more leadership communication. Hood might be missing earnings. Still bullish on HIMS. It's a whole lot of words. I don't know. I've never been I don't think Robin or SoFi is looking less bullish short term at all. I think 2025 is going to be stellar for them. I think Q1 is going to be stellar for them. I think short term they're going to be amazing. Hood might miss earnings, but honestly, I don't know if that's the truth anymore. And still bullish on HIMS. I've never been bullish on HIMS. No, I'm not anti on HIMS. I'm forced to own shares, but I've never looked into HIMS really. Yeah, Paul's right. I'm not. You might have some money or whatever. I don't care what you do with it. Now, you might get a recommendation from other people on YouTube, but it won't be from me. And Nvidia is well, I wouldn't say breaking out. It's exactly where it was not too long ago, but it was good to buy the dip while it lasted. I couldn't believe that people got so bearish on Nvidia there. I mean, 113 was a screaming buy, and I put it in my Discord. I said, "Hey guys, I dumped half my cash position whenever it was at 113.75," and I was like, "I don't know. I can't see how this continues to drop." And thank God people changed their mind pretty quickly. I didn't have to sit on paper losses for long. I mean, not even for a second. The second I bought it, it started going up. Yeah, overnight markets is going to continue to take market share. That's interesting as well. The different products that they have, that's very interesting. I'm excited. All right, ladies and gentlemen, thank you all so much for watching, but I'm going to get going. Really do appreciate your time, but bye for now.